Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site is McCormack, Factor and Core Equity Strategist at Invesco, as well as Sara Mehle, Senior Index Research Strategist at Nasdaq Investment Intelligence from our Richmond, Virginia office. We're here to discuss how the Nasdaq-100 is responding to shifting Fed policy with rate cuts on the horizon and what investors want to hear from the presidential debate. Ryan, it's great to have you on the desk as always. Welcome back to Trade Talks. And this week just kind of snuck up on us. We have key inflation data this week, the presidential debate tonight, and now we know that the Fed is shifting towards a more employment outlook than they were perhaps with inflation.
Yeah, it did sort of sneak up.
Right.
It feels like earnings season just sort of wrapped up, and then you get all this stuff thrown at you. But yeah, look, I mean, for the better part of 2 years now, right, everything has been so Fed focused. And I think when you look at the price data scheduled for tomorrow with CPI, Thursday for PPI, sort of like the final two little hurdles before we get to the Fed next week, where, as you said, right, it's largely anticipated that it's actually fully baked into the market that they're going to cut at least by 25 basis points. You have a lot of market participants that are actually calling for a 50 basis point cut. And I think, when you look at the price data that's scheduled for release this week, it's sort of like the trend is your friend, right? You have your regular headline CPI, scheduled for 2.5 or anticipated 2.5 to 2.6%, lowest level since March of 2021, February of 2021. Even the core, right? The core is scheduled to remain the same as the July reading, again, but continuing kind of that downward trajectory. So, I think it's sort of showing continued progress against inflation, and I think it's sort of all but seals the deal for the Fed next week. And then, of course, we had the presidential debate tonight, which everybody was going to be watching, and we have sort of the seasonal trends taking over in September. Traditionally a pretty weak month. This year, not really any exception to that.
Yeah, and we'll get into what investors are looking for from that debate in just a moment. But I want to bring Sara in. Sara, with your technical expertise here, how are you seeing from a price action perspective the Nasdaq-100 responding to a shift in Fed policy and some of the uncertainty that's out there?
Well, Joe, we hit those all-time highs in July, and then we saw the technical chart kind of fall off a cliff throughout the month of August, falling down to 17,500. We did rally back up to 19,900 before, again, pulling back to right now we're at 18,500. The one thing I do want to say is that we were able to move back into an overall positive trend. So even with a lot of this volatility that we've seen over the last 2 months, on this point and figure chart, I think it is a positive. The one positive here that we can kind of take away is that the long-term trend is positive. We do remain on a sell signal in a column of O's, again, down at that 18,500 level. But we do have multiple levels of support before hitting those lows that we've seen recently. So we have some support at 18,100 and 18,000. The low that we hit in August was 17,500. So again, we remain above those levels. And then going back to April, where we hit 17,000. So again, long-term trend is positive, but right now supply is in control with the sell signal and with the column of O's. From here, we would reverse up into a column of X's at 18,800, and we would return to a point and figure buy signal, which just tells us that demand is in control with a move to 19,700 or higher.
All right. So, Ryan, it sounds to me as if the volatility that we saw as of late is more so within the context of a bull market, if you want to assign a label to it.
Yeah, and I think that's fair. I mean, you look at sort of earnings season wrapping up. I mean,
and earnings was quite decent.
A decent earnings season. And, you look at projections, right? And I think projections, they've been varying pretty considerably here over the past couple months. You've seen sort of sales figures come down or sales estimates for the Nasdaq-100 come down a little bit. Earnings growth for both this year and next year is, right now projected to be pretty robust. So, I think the overall segment of sort of this being within a bull market, that context, coupled by pretty decent earnings season, I think that sort of plays.
Yeah, because when we saw that the volatile response in August and even somewhat of a slow start in September, it was relatively orderly. It was a flush, and it was just machine after machine, selling off the market. It seemed to be relatively orderly, and then of course people took advantage of some valuations looking more attractive than perhaps they did at all-time highs going into August.
Yeah, that's for sure. I mean, like a terrible week for certain stocks last week, and you sort of saw some of that maybe kind of buying the dip on Monday, and we started to see it a little bit this morning, although we've seen a bit of chop here over the past few hours.
Yeah, and Sarah, anything you could tell when you look at it from a sector-specific view within the Nasdaq 100, any discernible trends that you could tell us about?
Yeah, just from the start of the quarter, it has been tech that has dragged the index, so pulling it down about 6%. Those sectors that have contributed positively, staples, telecom, industrials, basic materials, and utilities. So again, this is from an ICB industry perspective. But this is since the start of the quarter, so we are down about 5% in Q3 so far, with a little over 20 days to go. But it really, the laggards really from an individual stock perspective, there are names like Nvidia, Amazon, Microsoft, Broadcom, Google, a lot of these semiconductor-related and tech-related names.
Yeah. Well, Ryan, as we look towards the presidential debate, again, it feels like it snuck up on us a bit here. There are some pretty big policy issues that I think could be impactful, not only to the Nasdaq 100, but the market overall, whether you're thinking about fiscal policy, but when it comes to tariffs and taxes, I think that's really what investors are going to be focused on.
Yeah, I would agree with you. I mean, a lot of issues that will likely be debated and spoken about, but I think...
Well, I hope so.
Right? The definition of a debate.
Yeah.
But ultimately, I think when you look at sort of investors, what's kind of the spotlight on, it's got to be corporate taxes. Right? So details likely to be sparse would be my guess, but intention, I think, goes a long way and adds to some of the volatility leading into November.
Yeah, and Sarah, it certainly does, because we know, at least as it relates to the Nasdaq 100 companies, taxes do matter because they invest heavily in R&D and CapEx for future growth. So, I would imagine that some of those larger tech mega cap names, they will be predisposed to some of the rhetoric that comes out of the debate tonight.
Right. Like you mentioned, a lot of those Mag 7 names, I feel like we haven't said that term in a while, but a lot of those mega cap names leading the Nasdaq 100, such as Apple and such as Nvidia, Amazon, Microsoft, as I mentioned. Those names, a lot of these tech-related names are very sensitive to that sort of news, and I will be definitely tuned in, as I know you both will be tonight, to watch this debate, and really interested to see if there is an immediate market reaction and what plays out in the next few days to come.
Yeah, and Ryan, you and I, when we discuss macro, as we do monthly here, of course, the strength of the consumer really is the story of the American economy, with 70% of our GDP being derived by consumer spend, which is you can't bet against the consumer. They've held up really well here. When you think about higher corporate tax rates, when you think about tariffs, that sometimes gets passed down if things get more costly for corporates to either produce, to sell, to manufacture. They're always thinking about margins. You want to be careful that it doesn't start to impact hiring decisions. Again, this all trickles down to the consumer, whether it's in form of a paycheck or in form of more expensive prices.
Exactly, right? And we saw that sort of with the initial bump in inflation a couple of years ago, right? I mean, a lot of that just immediately got passed down to the consumer. But I think another thing worth noting and worth watching is the employment picture, right? We saw a pretty weak ADP number released. We've seen initial jobless claims still kind of hover around that like 227, 230,000 mark, well below sort of the line of demarcation for a strengthening or a weakening labor market. So still a pretty strong labor market by that measure. But really, I think you need to look at hiring and watching those payroll numbers. If we start to see that roll over, right, and in conjunction with higher taxes, I think there could be more pain in store.
And this is why I feel like it could be relief in a way that Fed policy has shifted a bit, and the expectations are somewhat known at this point, because the next variable really is going to be what's happening in terms of fiscal policy, tax tariff policy, and that at the end of the day is what impacts fundamentals and earnings. So in a way, it's somewhat of a relief that at least one side of the equation we have clarity.
Right. Yeah. No, I agree. I mean, and it's been something that we've been waiting for since last July. Right. We've kind of held pat in terms of the target rate for well over a year now, and it's sort of this event that everybody's been kind of holding their breath for. I think earlier or late last year, we thought it was going to be earlier this year. This has been pushed out, and I think September will finally be kind of the time to do it. But hopefully, should be advantageous for corporate earnings. And to your point, it takes kind of that one level of uncertainty off of the table. Right,
it certainly does. All right, Ryan, appreciate the insight as always. Thanks, Sarah, for joining us remotely from our Richmond office. And thanks for joining me from MarketSite, and Jill Malandrino, Global Markets Reporter at Nasdaq.